Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Last week, India completed 78 years of independence. And like many of you, I also heard Prime Minister Modi's message of Atmanirbharta delivered from the ramparts of the Red Fort. And it really struck a note. Atmanirbharta, self-reliance, the one thing that guards our independence. Now, it holds true for a country, and it definitely holds true for us as individuals as well. Self-reliance is the only way to ensure our financial freedom and our financial well-being. Over the last many years, mutual funds have become our biggest partners on this road to financial freedom. Small ticket or big, metro or non-metro, mutual funds have sparked the revolution, which is rapidly converting India from being a nation of savers to a nation of investors. And today, we take stock of where this journey is heading and what new innovations the mutual fund industry perhaps has in store for us investors. Well, I have a full house with me on the show today. So let me quickly welcome all of the mutual fund veterans. I have with us, of course, Navneet Manoj, Chairman of AMFI, as well as MD and CEO of HDFC Asset Management. I have Saurabh Nanavati with me in the studios as well, CEO of Invesco Asset Management. And of course, we have Nilesh Shah of Kotak Mahindra AMC joining us, virtually. And again, in the studio, Sandeep Sikka, Executive Director of Nippon Life India Asset Management. Gentlemen, thank you so much for joining in. What a pleasure. It's a full house. And I think it's great to have all of you in because we want to really understand where the journey is going when it comes to mutual funds, self-reliance and financial freedom, because that's what it's all about, right? So tying in with this Independence Day month. So let me open with you, Navneet. Broad thoughts on when the whole aspect of mutual funds giving you the freedom that you need in your life. How do you describe, first of all, financial freedom?
So thank you, Surabhi, for having us. It's an honor and privilege for all my industry colleagues and me personally to be part of this industry over the last 30 years. It's a coincidence that we are also celebrating 30 years of AMFI. And it's been an honor for all of us to serve this industry and serve millions of investors. You started by talking about Prime Minister's message on Atmanirbharta. That's what he's been saying for the last few years. Yeah. And it's very important that in every possible way, each and every citizen lives a life of dignity. Government has done a tremendous job on creating that social security by supplying many things to meet their day-to-day needs, but at the same time, for financial security, it means living a life of dignity. It means ability to fulfill your aspirations. It means life without financial insecurity. And I think mutual fund as a product, mutual fund as a solution provider over the last couple of decades have worked very hard to provide that ability to each and every household that they can meet their financial goals, they can meet their life goals by investing through mutual funds. So benefits of diversification, benefits of convenience, and making it easier for every investor to create a financial freedom for themselves. So that's what our industry has been working under the guidance of our market regulator.
Absolutely, and for the average Indian citizen, moving away from just the concept of letting your money sit in a bank account, and that's the best way to ensure your retirement safety, security, etc., to looking at it in a very, very different manner from an investment lens. Let me bring in Nilesh as well. Great to have you on this discussion, Nilesh. So you tell us, let's talk, when we talk about financial independence, what is the definition? Is it X amount of money in the bank? Is it a 6-digit salary? I mean, how should a person really think of financial empowerment and financial independence?
Thank you, Surabhi, for having us over here. And financial independence is a state of mind. आपको जो करना है, वो आप कर सकते हैं. When you reach that state, that's financial independence. For someone, it could be 6-digit salary. For someone, it could be bank balance. For someone, it might be wealth creation. It's a state of mind which allows you to do what you want to do.
Okay, let me bring in both Saurabh and Sandeep into the conversation as well. So it's been a long journey. And most of your own companies have been around for, decades as well. So Sandeep, you tell us, what are the changes in the investor that you're noticing? I mean, just this year, if we see, the market has not been very charitable with returns. But you folks pull in the money every month. I mean, I report on those mutual fund inflow numbers, and the last number was a record high number. So your thoughts?
So, Surbhi, first let me start by, I think you mentioned about the Prime Minister's speech on the 15th, I think Prime Minister had this, Har Ghar Mein Taranga. I think today, we're happy to say, as a part of the mutual fund industry, we want to take it Har Ghar Mein Mutual Fund. So that is something what the industry is working towards. And I'm very happy to say, this is actually, it's happening. Today, we can proudly say, almost every pin code of India, every district of India, we've got investors. And while the foundation of this was laid by the regulator long back when we started something called B30, and today we give credit, now on the 30th of our AMFI, we have crossed that stage of B30 to B300. And the reason why I give this example is this is the big change that has happened. Earlier, the mutual fund investors used to come from big cities and towns. Today, the fact is, I think coincidentally as industry, we opened our first branch in Leh. Now, that tells you where we are going. But the big change that we are seeing, the markets you mentioned, right, this year the markets have been flat. But the big change that we have seen is investors are maturing. 10 years back, when markets used to be volatile, the number of calls we used to get from investors in a call center, our RMs used to be very high. Today, the fact is when the markets have been volatile, people are investing more through SIPs because they understand, they need to time it out. You can't time it to perfection, but you need to spread out your investments. So that's a big change we have seen. And also another big change that we have seen, way back in 2000 when my father retired from government service, I had to convince him to invest in mutual funds. But last time my daughter started working, she asked me this question, which SIP should I invest? That is the big change. That is the new India, where young investors want to move away from bank deposits and come to mutual funds. And that is exactly what is going to make India Atmanirbharta, where every investor will be joining this journey of India growth story through the mutual fund industry.
Okay, well, absolutely. I mean, fingers crossed and optimism galore. But Saurabh, every time the market falls, obviously this thesis gets tested, and till now retail investors have completely prevailed, right? It's just that now, and especially for people who probably came on the mutual fund investing bandwagon after COVID, this is probably the first time that their patience is being tested in terms of returns. Usually returns draw more inflows, draw more investors. But now, with what we've seen the last couple of months, do you think there is a bit of a test ahead for new investors, young investors particularly?
I think the new investors, the perspective has changed. This whole education which has been carried out by the regulators, AMFI as an association, the fund industry, I think is hitting home. And when you talk with these investors, they are coming with a 5-year, 10-year perspective. They are basically saying that, look, I want to participate. It's time in the market rather than timing the market. You may feel that the last year has been challenging from the index being flat. I think there are a number of funds which have actually delivered even double-digit returns, and that's where the active fund management part of the industry has come in. So if you analyze the flows, you will see those performing funds are also garnering, the majority of the money because they have really stood out. Flat returns on the index, but a double-digit return on your mutual fund. That's a great outcome in that sense. So I think what has really changed is you go back 30 years, that first, Morgan Stanley mutual fund where people lined up thinking that 10 rupees will become 30 rupees. And come today when people are basically saying, look, I'm here for the long term. There is an NAV which reflects the correct market price. And I just want to stay put. I think that's the big difference over the years. Just one more aspect on this. The industry has gone through tough times. 2008 to 2016, I'm not sure if but the numbers will show that retail investors were leaving the industry. They have started coming back from 2016 onwards. And I think this time it is for the right reason.
That's interesting, Saurabh, that you're saying that the lessons seem to be getting learned very well. So Navneet, you tell us, I mean, in your experience, and I'm talking about the recent past, the last 2 years, 3 years, post-COVID, what is the one trend that you've noticed in terms of investor behavior that really stands out as a change?
If I can use one word, I think it's resilience. Over the last couple of years, notwithstanding the volatility, what we are seeing is a resilience among investors, maturity among investors, and across all kinds of investors. Sandeep talked about more and more investors joining from smaller towns. Saurabh talked about the younger investors and the behavior that's changing. I think that's one of the biggest change. Investors understand that life expenses are increasing, life expectancy is increasing in terms of number of years, and life expectations are increasing. They need to invest more and they need to invest for longer term. I think that's one of the biggest, I would say, trend that is clearly visible over the last couple of years. And we have seen, like last month, you gave the example of July, where markets were not doing well. I think you had all kinds of news flow, which led to volatility. But despite that, investors kept the faith and increased their SIPs.
You know, Nilesh, on this point, domestic investors are all coming in, keeping their faith for the long term, and that money has been pouring in. The argument that's often made is it going to, not really a bubble, but is this going to create its own, repercussions? Because domestics have been buying at a time when foreigners have been selling, when insiders have been selling, private equity has been selling. So sometimes you feel whether retail could be, a little vulnerable in an environment like this.
Anyone who believes there is a bubble, will he be willing to short the market at current level for 10 years? Most will say no. For 5 years, answer will be no. For 3 years, answer will be no. Let the action speak louder than the word. Now let's look at from a consumer point of view. We as Indians prefer short-term gain over long-term pain. There is 9 out of 10 speculators losing money in retail on speculation F&O as per SEBI's report. About 1 lakh crore is lost over there. In the gaming, again, 1,20,000 crore is lost. In the lottery, sellers make money, not the buyers. But there are states where people put more money buying lottery than buying equity. If you look at Ponzi scheme, even in Mumbai, in Taurus, a jeweler, bankrupted people. Now, all these people, if they invest in lottery, Ponzi, F&O trading, gaming, crypto, people have no problem. But when they invest in mutual fund, yes, in the short term, they could lose money. But in the long term, they will make money. Now, should we go for short-term gain and long-term pain? Or should we go for short-term pain and long-term gain? So from a consumer point of view, investor point of view, as well as from a commentator point of view, mutual fund sahi hai.
Okay.
So I come in here, it's many times this assumption is there that foreigners are selling, foreigners are more smart, Indian investors, retail, like we said, are they gullible? But the data shows something very different.
Not just foreigners. Indians are selling. Indian promoters, Indian venture capitalists or private equity who were holding the stocks earlier.
Let me use all the retail investors, let them see them as a stock. And when we have a lot of retail investors, we have done this analysis many times for our own database, The smallest of investors, the retail investors, actually have made the maximum money.
On that note, we're going to take a very quick break. On the other side, we want to find out from these gentlemen what the future holds for us investors. There's so much changing with respect to regulation. The industry's been given some more freedom to, offer differentiated products as well. So what does it mean for us? We'll find out after the break.
Let's talk money